The most important detail on this plan is not the credit card, it's the credit card user. If you're stuck paying interest on your credit card on a month-to-month basis, then stop whatever you're doing and watch this video. For this video, we don't care about the multipliers or the credits that are available on the credit cards. If you're paying interest on your credit card, then guess what? Those credits are automatically voided because you're definitely paying more interest than what you're getting back. If you're ready to stop digging yourself into a hole, then sit down and keep watching. Welcome back to Tito's Financial Corner, where we talk about credit cards, points and miles, as well as travel. Today, we'll be talking about how you can utilize credit cards to get out of credit card debt. I know, it's an oxymoron, but you'll see what I mean. Now, with interest hovering anywhere between 25 to 30%, any interest that you're paying will automatically void any of the credits that you're getting back because you will definitely be paying more on that interest than what you're getting back in the rewards. So we'll cover what the plan is, how to execute the plan, as well as some great cards that you can utilize on this plan. Now, you can utilize other cards, but I believe that these cards are some great options, especially if you have any balances that you're looking to pay off within the next year to 2 years. Quick disclaimer, I am in no way, form, or shape a financial advisor. I am just a guy on YouTube that's recording in his house that wants to share my story on how I got out of credit card debt and how you can utilize the plan or you utilize a different version of this plan to get yourself out of credit card debt. But I would highly suggest to speak to your financial advisor to create a much more suited plan for your needs, because your financial advisor will know what income you're bringing in, your expenses, as well as how much debt you have, so he or she will make a much better tailored plan for your situation. With that said, let me just set the stage for you. About a decade ago, a young, handsome Tito got himself into the credit card world when he was only 21 years old. I know, a bit old to get into the credit card world, but that's because my family really viewed credit cards as a way to get into debt. They really view credit cards as just an easy way of getting yourself into debt, and you should avoid it as much as possible. They believe that the only thing that you should utilize was either cash, a debit card, or a check, but never a credit card. And that's a mentality that I honestly took to heart, and I didn't really want to hear anything about a credit card, but that was until I started working at a bank and then at a credit union that I started seeing all the perks, all the multipliers, as well as all the securities that a credit card would offer that a debit card might not offer. So that's when I started getting myself into the credit card world with just one single credit card. And I hate to say it, but my family was right in the sense that the credit card got me into trouble. Or let me rephrase that, I got myself into credit card debt utilizing my credit card. I cannot blame the credit card since it was only there and it was only available to me to use. I made the decision and the choices to start putting my transactions on that credit card, and much more worse was that I started utilizing my credit card as a savings account, as an emergency account, so that anything that I needed at the time, I would put on my credit card and then pay it down the line within, the next year or 2 years sometimes. So that's right, whether it was an emergency or whether it was a vacation or whether it was something that I needed to get done or paid for right there and then, I would always put it on my credit card and then I would slowly pay it over time. But I would also pay interest over time. It got to the point where this mentality put me in the hole for $3,000. Now, I know $3,000 might not sound as the highest amount, but for a 23-year-old, 24-year-old Tito, that was a lot. I was still having my normal everyday expenses, and now on top of that, I had $3,000 worth of debt, and I just couldn't really see how I could get out of this. And that mentality, unfortunately, stuck with me for quite a few more years until I started utilizing a credit card to get me out of that debt. So what did I do? Easy. I started noticing that there were a lot of credit cards that offered a 0% intro APR period. Whether that was 12 months, 15 months, 13 months, 20 months, 24 months, I just noticed that they offered a 0% intro APR. And that just got me thinking, what if I could use that specific period that another credit card would offer to put my debt into that credit card and pay it down before that that new credit card would start charging me interest. So I went ahead and applied for one of the credit cards that we'll be talking about here shortly. So what I did is I took the balance that I had, the $3,000, I divided it by the number of months that I would have as a 0% intro APR period, and then every month I would pay that amount on that credit card debt. But at the same time, I was making sure that my normal everyday expenses were being paid for every single month as well, so that I wouldn't accumulate any additional credit card debt while I was trying to pay my current credit card debt. Let me set the stage on what we're about to do here a little bit clearer. When looking at the average national credit card debt in America, we're currently looking at $5,910. So let's round it up an additional $90 up to $6,000 just to have a nice whole round number. If we look at an annual percentage rate of 25%, since that's somewhere in the middle where some credit cards that would be the highest rate that you would get, whereas with some other credit cards that might be the beginning or the mid APR and they go all the way up to almost 30%, we'll go ahead and look at 25% as the annual percentage rate. If we look at 25%, on a balance of $6,000, the amount that you would pay on a daily basis on interest would be $4.11. So that's right. The bank is basically saying that for the price of a coffee and a blueberry muffin a day, you would be able to keep a balance and pay that amount to the credit card company so that they won't send your account into collections. Ain't that nice of them? But I know what you're thinking, Tito, that's $4, man. I could do $4 every day. I could do $4 right now. And I get it. But again, that's on a daily basis. Let's kick it up a notch. Let's look at a month. Let's look at a regular 30-day month. The amount of interest that you would be charged would be $123.29. This is starting to sting a little bit more. That could be the amount of the electric bill. That could be your phone bill. That could be your weekly groceries if you're just living by yourself. That's right, it's starting to hurt a little bit more, but let's kick it up because when we're looking at an APR, it's an annual, i.e. the whole year, percentage rate. So if you don't pay that whole balance of $6,000 throughout the whole year and you're being charged a 25% APR, by the end of that year, you would have paid $1,500 just in interest. That's right. You haven't even started paying the principal. You have only paid the interest. It's added up to being $1,500. That amount could easily be your emergency account balance. That amount could easily fix your car. That amount could easily get you out of any emergency that you might have. So when we're looking at interest and when we're carrying a balance on a month-to-month basis, don't tell me that 25% isn't that much. It is absolutely a lot. It is an astronomical amount. And guess what? That is not an amount that you need to be paying. I completely get that life happens, that emergency happens, and there are times where if there's nowhere else to get funds from, then yeah, you need to utilize your credit card. Guess what? I've had that happen to me, where I had nothing else, or I didn't have enough in my savings account or my checking account, and I had to put it in my credit card. And it burns, and I get it, it happens. But at the same time, we have to make sure that we make the conscious decision that we have to pay that balance down so that we don't pay any interest or we pay as little interest as possible. So with that said, before we touch on the credit cards, there's just 3 quick rules that I want to touch on. And these are 3 rules that I set for myself. And these were rules so that I can make sure that I didn't keep digging myself into a bigger hole or that I got myself into a bigger amount of debt. First rule is that you have to stick to the plan. It is so easy to just create a plan and think that you're going to be able to pay for it every single month. And obviously after the first 2 to 3 months, it starts to become a little hectic, especially because you still have your normal everyday transactions. But you need to have the mental fortitude to make sure that you put that amount of money outside. Whatever amount of income you're bringing in, that specific amount that you set for paying your credit card debt, you cannot touch it for anything other than emergency, of course, but you need to make sure you add it on top of your bills, whether that's a mortgage or your monthly rent, whether that's your auto loan or your other credit card or your other debts. You have to make sure you add it to the equation every single month and that you make that payment every month. Unfortunately, this is not one of those situations that you can say, you know what, I'm gonna skip this month's payment and I'm just gonna make double the amount of payment next month. That would put you at an even worse place because if you don't have the monthly amount this month then what makes you certain that you're going to have twice that amount next month? So again, I know life happens, and I know that you have your normal everyday transactions, but at all possible, make sure that that amount that you set for your credit card debt is untouched. Rule number 2 is that you have to make sure that you pay that whole balance down before the 0% intro time period. Whatever that time period is that you select, or the credit card that you select, you have to make sure that you pay that balance down before that specific time period ends. Otherwise, you're going to be back in the same hole paying interest again. And the third rule is that you have to make sure that you pay your previous monthly balance on the new credit card. Meaning, if you're putting all the new transactions, which again, if you're using a credit card that earns you points for either cashback or for travel points, then I completely would understand you utilizing it for your normal everyday transaction. And that's fine. But that also adds another layer to the whole equation. You have to make sure that whatever amount of transactions you put on that credit card this month, the next month, you pay that whole balance down plus that specific amount that you had set up for the credit card debt that you transfer over. So again, you can do it, but every month you have to make sure that you pay down that balance and that you do not have any additional balance to pay down. So with that said, let's go ahead and look at the credit cards that would be able to offer you a good option to transfer any credit card balance to pay it down. Now, while these credit cards offer a 0% intro APR, they still charge you a fee for a balance transfer. And it could be either a specific dollar amount or a specific percentage. You'll see what I mean when we touch base on each individual credit card. First option would be the Chase Freedom Flex or the Chase Freedom Unlimited card. Both of these cards have no annual fee, which is great. That's the last thing we have to worry about when we're paying down credit card debt, is having to worry about paying an annual fee on top of that. These two credit cards also offer a welcome bonus of $200 after spending $500 in the first 3 months. That's great. Both of these credit cards offer a 0% intro APR for the first 15 months that you have these credit cards. Now, with the Chase Freedom Flex or Unlimited card, if you do a balance transfer within the first 60 days of opening either of these two credit cards, you would either be charged $5 or 3% of the balance transfer amount, whichever one is higher. And if you do the balance transfer after the initial 60 days, then you would either be charged $5 or 5% of the balance transfer amount. This is a credit card that I utilized to get myself out of that credit card debt balance of $3,000. So what I made sure to do is I put that balance of $3,000, and then instead of utilizing the full 15 months, I made sure to only use 12 months. So that way I would still have a 3-month wiggle room if for whatever reason any of my monthly payments were not made. Now, thankfully, I was able to pay that balance down within half that time, so that was great. But again, I still had those additional months of a 0% intro APR if I needed it. Now, let's touch base again on the average national credit card debt of $6,000. If we would look at $6,000 and divide it by 15, which again, that's the number of months that you would have a 0% intro APR, then you would need to make sure that you make a monthly payment of $400 to make sure that you pay that full $6,000 balance down before the intro APR period is over with. And if you are in the market for either the Chase Freedom Unlimited card or the Chase Freedom Flex card, then do me a solid and utilize the referral link in the description below. I would greatly appreciate it. The next credit card that we're going to be talking about is the Discover It Balance Transfer card. Now, this card has no annual fee, which is great. It does not have a welcome bonus like the Chase Freedom cards, unfortunately. The intro 0% APR period is for 15 months. Now, if you do a balance transfer before July 10th, 2023, you would only be charged 3% of that balance transfer amount. After that specific date, you would be charged 5% of the balance transfer amount. And if we take a look at the average national credit card debt balance of $6,000 and divide that by 15 months, you would have to pay $400 on a monthly basis to make sure that you pay that full balance down before the intro APR period is over with. The next credit card that we're going to cover is the Wells Fargo Active Cash Card. Now, just like the previous two cards, This card does not have an annual fee. It does not have a welcome bonus. This card has an intro 0% APR period of 18 months. But if you make at least the minimum payment requirement every single month, you would get an additional 3 months of that 0% intro APR for a grand total period of 21 months. That's right, almost 2 years where you would have a 0% introductory period with this credit card. Now, the fee that you would be charged to do balance transfer on this credit card is as follows. If you make the balance transfer within 120 days of opening the credit card, you would be charged either $5 or 3% of the balance transfer amount, whichever one is higher. After those 120 days, you would be charged either $5 or 5% of the balance transfer amount. Again, whichever one is higher. And again, if we're looking at a balance of $6,000, if we're looking at the initial introductory 0% APR period of 18 months, we would have to make a monthly payment of $333.33 to make sure that we pay that full balance of $6,000 within 18 months. But again, if we make the minimum payment requirement, we would get an additional 3 months to that 18 months, equaling 21 months of a 0% APR. And taking a look at the balance of $6,000, our monthly payment would then only be $285.71. The last credit card is the Bank AmeriCard credit card. Now, this credit card does not have an annual fee, and unfortunately, it does not have a welcome bonus. But what this credit card does have is 21 months of a 0% intro APR period. So that's right, almost 2 years that you can have with this credit card, and it would not charge you any interest on either any new transactions that you make, as well as any balance transfers. Now, quickly, with the balance transfers, they would have to be made within the first 60 days of opening the credit card. And the balance transfer fee on this credit card would be 3% of the balance transfer amount. If we take a look at the balance of $6,000, and if we would divide that by 21 months, then our monthly payment would be $285.71 to make sure that we pay the full balance of $6,000 before the 21-month period is over with. As you can see, there are some great credit card options out there. And guess what? There's other cards that I didn't even mention that you could literally flip-flop or switch for the ones that we did mention, and the plan would still work. At the end of the day, the most important detail on this plan is not the credit card, it's the user. That's right, it's you. You have to have the mental capacity to make sure that you set a clear goal of paying down any credit card debt and making sure that you pay it down within that specific time period of whichever credit card you select, and at the same time that you do not collect any additional credit card debt throughout the journey. So I would highly suggest, if you are in this situation, to take a look at the credit cards that are available for you and the ones that you could apply and potentially get approved. And obviously, if you would go with the ones that would offer you the longest 0% intro APR, that would give you the lowest possible monthly payments. But again, if you have specific cards like Chase credit cards or Discover credit cards or Bank of America credit cards, then you should also look into those options as well. At the end of the day, as long as you have a great plan or a good plan that you can follow through, that's all that matters. And again, if you are having issues, then please go ahead and speak with your personal financial advisor to set up a plan that's better suited for your needs. With that said, I want to hear from you guys. Have you ever utilized one credit card to get out of debt that you have with other credit cards? Have you had any success with it, or have you had any issues with it? Please let me know down in the comments below. With that said, if you found any information useful during this video, please go ahead and hit that subscribe button as well as that like button. Thank you, and I hope to see you in the next one. Adios.